Have you ever wondered what will happen if you can make profit consistently week in and week out in forex trading? This is what I and my students do every week by implementing this simple strategy. And in this video, I will show you how to do proper top-down analysis and start gaining consistent profit every week as a forex trader. To have a rock solid top-down analysis strategy, you need to understand these three key components. The first is most overlooked by beginner forex trader, and that happens to be the most important element in this strategy because it is the foundation of every great strategy. Once you get it wrong, every other steps become useless. This is what I call the directional bias. The directional bias simply tells you which way you want to go in the market. Are you going to be a buyer or are you going to be a seller? Once you have a comprehensive strategy that tells you with high degree of accuracy that the market will be bullish, then you have to position yourself to be a buyer. And if that strategy tells you that there's a high probability of the market to go bearish, you position yourself to be a seller in the market at that given time. Now, as a trader, you have to determine what kind of trader you are. Are you a position trader? Are you a swing trader? Are you an intraday trader? Or are you a scalper? My belief is that every trader belongs to all these categories, but we can decide to choose based on our lifestyle and our time on which particular trader we want to be. For example, if you are to be a position trader, that means you don't spend most of your time on the screen. A swing trader simply takes a trade and holds it for more than a day. An intraday trader takes a trade and executes it within hours of the same day, while a scalper takes a trade and executes within minutes of that particular session. A good directional bias strategy boils down to this simple probability premise. If this happens, then that. If this happens, then that. Now, this could be in terms of using indicators, in terms of looking at price action, or in terms of simply drawing a line on your chart or something similar to that. But I'm going to show you how I read the market every day by doing what? Doing my directional bias, knowing the direction to take every single week and ride that trend till the close of the week. So without wasting time, I'm going to go straight in and show you how I do this every week. So for this purpose, I'm going to look at analyzing the top-down analysis for NAS 100. So for me, I simply use a simple strategy to tell me if the direction is bearish or if the direction is bullish. And this strategy is what I call the opening price trading strategy. So as you can see here, this particular week, the market rejected of this reversal opening price and closed below this. And as a result, I deem this to be a bearish movement in the market. And where do I expect the market to trade into? Potentially, yeah, but I have some form of obstacle in this level here. So what am I doing? I'm only plotting my lines on the opening prices of this particular weekly chart. So this week here, we rejected of this level. There are more confluences that I would need to know if this particular bearish move is over. So for now, the weekly is still bearish. So I go to the daily. In the daily, I also do the same thing and see what direction the daily is. So currently, the daily time frame is also bearish because it rejected from this particular opening price. And since then, we have been closing below the opening price to the downside. And as you can see here also, we close below this. So that means if price comes up to this level here, I will be interested in looking for a short. Okay, and as you can see, price came in here and rejected. Now, for me, because I am on the daily, I have to take cognizance that this setup that I'm trying to take will be an intraday session, because I'm not going to, it's not a swing set trade. I'm going to hold this trade for some few hours because of what we have here. This is an obstacle here that may prevent this market from going even lower. But remember, my target on the weekly potentially can reach to this point. But my obstacles, things that will prevent me to get there or prevent price to getting here, is the daily opening price. All right. So from here now, I know that this area is the most logical area for me to start looking for a sell to the downside. So going to the 1 hour now, as you can see, within the 1 hour, price reacted in that zone and we are heading down. So when the market opens, I'll be interested in this level like this, just in case we didn't take this entry or you didn't take this entry. I'll be interested in this particular level to continue going short. Now, because I know that price might be getting here, doesn't mean I should be blinded by not observing this level. These are areas where I will be taking partials, okay? As price moves down, I'll be taking partials here. So because I know that this is an obstacle, I will manage my trade accordingly the moment price approaches. The next directional bias we are going to look at is on US 30. For me, I personally use the weekly, daily, and the 4 hour for my trades. Be it scalping, be it swing, be it intraday. I use those 4 time frame mostly. So looking at the weekly here on US 30, you can see that price rejected of this one. Yeah. Now, whenever you see a gap, normally the market needs to be efficient, meaning the closing price yesterday should be the opening price today. But whenever there is a gap, that means there's a form of manipulation or something must have happened over the weekend or over the day or throughout the night that will sponsor this particular jump. So when that happens, you just bring back the price to your closing price, because this price is a false price. And if you rely on this over the long run, you are going to make blunders. So from my experience, it's always good to bring it back to the closing price. But when they are at the same place, then you are okay. And again, you can also say that this was where the market also rejected from. This is a classic break and then a retest scenario. All right, so let me choose that. Let me choose that because the further the opening price, the better. So in this case now, I have my what if, then that should happen. What if price breaks above this? That is the condition. If price breaks above this, then we might get a rejection. So every directional bias or top-down analysis that you want to use should have what if this, then that. For example, for those that uses moving average, they can decide to plot a 200 moving average here or a 100 moving average there, that whenever price trade, if price trades above the 100, it means we are bullish. That means we buy. If price trades below the 100, that is a simple scenario, but however, markets are more complex than that. But the logic is that whatever strategy you use, you must be able to put what if this, then that into it, because it makes it easy to apply in the market. So now we have this rejection. So this is telling me that the market is bullish. So on that note, if price give me a retracement to this zone, if price come back to this zone, this is where I want to be buying. Okay, I'll be looking for trade entry from here within this zone. So if price do not give me that re-entry, then no problem. I will simply wait for more opportunities to come by. So now within the daily, do we have a rejection? We don't have a rejection here. On the daily, we don't have a rejection. Do we have one here? I think we have this rejection here from here. Okay, so we have this rejection is okay. I take this one off. Rejection. So the daily also is bullish. So on that note, I'll be looking for a push down, still the same zone. Okay, when price trades back to this zone, I'll be looking to enter. Let's take a look at pounds USD for directional buyers. Then we look at Euro USD, and then we look at gold. So on the weekly, pounds is moving. We didn't get any form of rejection. Let me see if we tap into this area. No, we missed it. We didn't get there. So definitely it was a classic of this. So as you can see, we have this rejection here. On the daily, we can then say that the pounds USD is bearish based on this weekly rejection. Pounds USD is bearish. And then where can we start looking for entry? For me, these are my levels. If price comes in here, I'll be looking to sell. I'll be looking to sell. And remember our obstacles, areas that might prevent us from going lower. This, you need to put it within your strategy. When you are entering at a particular level, also know the particular level that can stop that movement. And in this case, these are the zones that can stop the movement from here. When the market broke, it didn't have an opportunity of coming up. Instead, it fired away from the opening price down. Now, a push back up, I'll be interested in a sell. And the first place I might look at for obstacle is this opening price created. So within the 4 hour, where are the possibility for me to start looking for trades? And by the way, the daily also is bearish from this rejection here. We can see that the daily is bearish as well. So in my last, and I think I mentioned this area, you can be looking at this area for a form of intraday and scalping opportunity. I will try to react from here. If I get stopped out, I'll refine this daily zone to this area here. Or I include this Quasimodo. Okay, this is just a rough sketch of how I look at the market with my strategy. So the same thing with yours. When you have a strategy, be it SMC, ICT, whatever strategy you are using, make sure that you have areas that may be against the direction. And those are the areas where you take your profits. Then there's what we call trade management. I will talk about it before I end this video. Then from there, we are going to look at gold. Let's take a look at gold. On the weekly, gold also is very interesting here. On the weekly time frame, we rejected from this level. Okay. And we also close below this. So when you go to your daily now, I'll be looking to sell gold from this area here. Okay, if price trades in here, I'll be looking to sell gold. But first of all, there's something I'm looking at in this gold analysis. It is this level. Because when the daily level tells me to buy, I will buy. Then I will take my profit from the weekly areas to sell. Okay. From this level, last week we gave out this update in the Raba Fx. Actually, a student of mine who I trained gave out that signal, and you can see the update on gold pushing higher, but the daily hasn't changed yet. So it's better once price trade into this area now, you can start looking for a sell setup. That is what I want to say here. We push into this area, anything above it is your premium area to sell. All right. So these are the ways, simple ways where I simply determine the direction of the market. I don't have to look at the overall market structure to know if the market has broken, what's it called? A structure high or structure low. All those things with time for a beginner is very confusing. All right. Because if you look at the structure on the weekly, structure on the daily, structure on the 4 hour, you end up being confused because 10 people can look at the same structure and come up with 10 different ideas. But with what I teach, if 10 people look at it effectively, they come up with the same directional bias. Okay. So the last one here, then before we look at setups and entry, when it comes to this particular after Euro USD directional bias, I'm going to look at the second and third point. So stay put, Euro USD. Okay, here's the almighty Euro USD, and as you can see, we rejected from this weekly level on the week. So we presume the market should be bearish. And remind you, okay, we haven't gotten here. And we have this level also where we have not closed below. But let's look at the daily. Let me take off this. I'll be looking for sell opportunities the moment price trade into this area. But in the meantime, I can buy into this. This is what we call edging. You buy in order to sell. So we have this nice rejection. I have to confirm this. We didn't tap in there. So we can say this is a weekly daily rejection here. Okay. So this is a weekly level. Anything below it is golden. All right. So on the 4 hour, the daily is still bearish. Daily is still bearish. So it depends on what the market prints for us, but I would prefer to wait. I'm a patient trader to wait for price to trade back in here. I won't be buying because there's no reason. There's no logical reason for me based on my strategy to buy. So I'll simply stay put and wait for price to push in here. If there's a fresh reversal opening price, I can decide to take the trade from there. Looking at this, this is a nice trend line that I can be interested in. So this second one will help you to become patient, because without it, a lot of beginner traders blow their account. And this is what I call the setup. When you have a directional bias, which I've shown you now, the next step is for you to have a setup. A setup is simply things you want to see in order to press a buy or a sell button. All right. For example, if I go back to my NAS 100, my setup for A sell is simply when price came in here. As price come in here now, this is a setup where I can decide to start selling. All right, I can decide to start selling based on that setup. Then the last one, which if you want me to do a comprehensive video on this, put it in the comment section and I will take a look at it. The last one is the entry. Every strategy must have an entry. When you know your directional bias, you know your setup, then there should be a trigger. A trigger in the sense that once that happens, that tells you to enter the market. So these are the things that you need to put in place to make you profitable week in, week out in the forex market. And if you want to have a glimpse of the strategy that I trade, this video will definitely show you how to do that.